Finally, it seems like we have one trade war ending. However, another one may have just begun.
The U.S. markets were up last week, mainly because of the optimism that a U.S. and China trade deal is about to get done. The S&P 500 and the NASDAQ were both up between 2 and 2.5%, while the Dow Jones and the Russell 2000 were both up 3.3%. Now, the action from this past week made all of the U.S. markets up double digits for the year, and the Russell 2000 is leading the way up over 16% already year to date. Foreign markets were up just over 2.5%, while emerging markets were the only ones that were negative last week, with foreign markets now up over 8% and emerging markets still up over 7.5% for the year. The chart that we're looking at today is the S&P 500. And we wanted to talk about the S&P 500 today because chances are you've recently heard about the 200-day moving average, or you're about to hear about the 200-day moving average in the news. Because the S&P 500 last week on Friday broke out above that 200-day moving average, which is normally a bullish sign for the market. However, we feel that the blue box on this chart is more important than the 200-day moving average. And this is a resistance zone between 27.75 and 28.25. Now, if you look back to the beginning of the blue box, which was the end of 2018, you see that the S&P 500 went up and touched the top line of this box 3 times, got rejected, and subsequently fell each time. Although it is good news that the S&P 500 crossed above that 200-day moving average last week, in our opinion, the way that the market reacts in this resistance zone is much more important.
There were 2 main news stories that we were watching closely last week. First, we wanted to see what happened with the government shutdown, and that was averted on Friday. Second, and more importantly, we wanted to see what trade negotiations were like between the United States and China. And all reports coming out of those negotiations have been positive, and it seems pretty optimistic that we're going to have a deal before the March 1st deadline. The United States also stated that if we don't have an agreement by March 1st, they'd be willing to push back that tariff deadline by 60 days. Now, we were expecting to hear more information about those first 2 stories, but what we weren't expecting is a news story to develop over the weekend, as President Trump said that he's looking to levy a 25% tariff on all European auto imports. And the European Union fired back immediately, saying that they would retaliate with a $23 billion tariff against all US imports. And lastly, on Thursday, retail sales for the month of December were released, and shockingly, we've seen the biggest sales decline since September of 2009. Analysts were expecting numbers to remain flat due to the government shutdown, but the numbers actually came in at negative 1.2%. So the 2 news stories that we're going to be watching closely this week would be 1, the trade developments going on between the US and China, and also now the US and the Eurozone. And second, the Fed minutes are going to be released from their last meeting.
Also, keep a close eye on the performance of the S&P 500 this week, because investors do not want to see a rejection at this level.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks.